Hello, everyone, and welcome back to another daily analysis for today, which is Tuesday, the 9th, July 2024. The US dollar continues to face challenges amid growing expectations of a Federal Reserve rate cuts in September, fueled by signs of economic deflation. This week, the market focus remains on statements from Fed officials, which could stabilize the dollar if they maintain a cautious stance. Last week, the US dollar index, which measures the dollar against major currencies, saw significant selling pressure after reaching a multi-week high above 106. It closed lower for the first time in 4 weeks, driven by investor reassessment of early rate cut possibilities following disappointing US economic data. Looking at the US dollar index fluctuations, it closed near an intraday low last week, marking a 1% decline and ending its recent winning streak. While the monthly chart shows a long-term uptrend, short-term movements indicate limited support and resistance. To sustain upward momentum, the dollar needs to break above the 50-day simple moving average at 105.10 and psychological barrier at 105. Failure to do so could see downside pressure, targeting the 200-day SMA at 104.49 and support at 104.43, 50% Fibonacci retracement level. The WTI crude oil prices dipped to around $82 amidst ongoing discussions surrounding a ceasefire in Gaza, which could potentially impact market sentiment. Despite this, concerns over Tropical Storm Beryl disrupting U.S. energy supplies could provide upward pressure on the oil prices. Last week, WTI hit a high near $84.65, but has since retraced to around $83 in Asian trading on Monday. The market remains cautious due to geopolitical tensions and weather-related disruptions. The market sentiment is bolstered by increased expectations of Federal Reserve rate cuts, which may support oil demand. Looking ahead, steady global economic growth and loose monetary policies are expected to sustain crude oil demand and prices. The 14-day RSI and stochastic index indicate upward momentum, with resistance near the recent double top at 84.5 and 84.65. A further upside could target $85.8 and potentially reach April highs around 87.08. Downside support is at $81.81 with a psychological barrier at $80 if lower levels are tested. For our gold prices faced bearish pressure after Friday's gains, sliding to $2,350 on Monday. Reports of China's central bank suspending gold purchases for the second consecutive month in June weighed on market sentiment. Early Asian trading saw gold encountering selling pressure near $2,385, breaking a 3-day winning streak. The slight rebound in the US dollar and China's cautious approach to gold purchases contributed to the decline. Despite these challenges, geopolitical tensions and uncertain political outlooks in Europe and the Middle East continue to support safe haven flows, which could benefit precious metals like gold. The Federal Reserve minutes indicate a recognition of easing price pressures, raising expectations for a potential rate cut this year. This sentiment may weaken the dollar and support dollar-denominated gold prices. The 14-day RSI rose to 60, signaling bullish momentum. Gold has closed above the 50-day and 20-day simple moving averages for 3 consecutive days, suggesting ongoing positive sentiment. Key resistance levels include 2,393 and 2,400, with support around 2,340 to 2,330. And that is all for today's daily analysis. Thank you for watching and happy trading.